Welcome. In this video is Xcn coin rally coming. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we take a close look at the chart from a broader perspective, we can clearly see that the well-defined descending trend structure in which the price is currently moving remains intact. This trend line has consistently suppressed every attempt at a price rally in the past and has formed a strong resistance barrier against each upward move. Therefore, this trend line represents a highly critical technical level for investors and technical analysts alike. The continuation of this descending trend indicates that selling pressure is still dominant in the market and that buyers have not yet responded with sufficient strength. As the price oscillates near the lower boundary of this trend, it reflects a period of consolidation and indecision. However, from a technical analysis standpoint, descending trends do not last forever and typically end with a sharp move when the price eventually breaks free from prolonged pressure. If, in the coming days, the price manages to break above this restrictive structure and cross the descending trend line to the upside, it would be considered a highly significant technical breakout. Such a breakout usually indicates a psychological threshold being crossed in the market and signals that buyers are finally taking control. This, in turn, could trigger a strong upward price movement. There are several key elements to watch for in trend breakouts. First and foremost, for a breakout to be considered valid, it should be supported by sufficient trading volume. In other words, simply closing a candlestick above the trend line is not enough. There needs to be solid volume behind the move to show that traders are taking the level seriously. Otherwise, the price may appear to break out but quickly fall back within the trend, resulting in a false breakout. If this trend structure is broken to the upside, it would technically suggest a trend reversal, increasing the probability of the price moving to higher levels. After the breakout, the price usually pulls back to test the broken trend line. If this test is successful, meaning the former resistance starts acting as support, then a new upward wave may begin. Additionally, once the trend is broken, many technical traders and algorithms will view this signal as an opportunity to enter new positions. This could lead to increased buy orders and accelerate the upward movement. In short, the end of this descending trend could be the first signal of a price reversal and the re-entry of buyers into the market. For this reason, the key action in the coming days is to monitor this descending trend line closely, and if a breakout occurs, analyze both the volume behind the move and the subsequent price action to make strategic decisions. If the breakout does occur, it's highly likely that the price will experience a technical relief and begin moving toward new resistance levels. If you're looking to take a trade, you may want to wait for this breakout. But remember, looking at trends alone is not enough. Other metrics must also be considered. Stay tuned. According to Elliott wave theory, market movements are analyzed through wave formations, consisting of 5 main impulsive waves and 3 corrective waves. In this context, when we carefully examine the current chart, it is clearly evident that the price has completed its first upward wave. This first wave is generally considered by technical analysts to be the beginning of a new bullish cycle. It typically represents the phase where early buyers enter the market, positive news begins to circulate, and the price reverses direction after a prior downtrend. Once this first impulsive wave is completed, a period of consolidation and profit-taking naturally follows. In Elliott structures, this phase is referred to as the second corrective wave. The second wave often reflects a psychological state in which market participants think that rally was just a correction, leading to selling pressure as cautious investors return to the sidelines. However, this correction does not indicate the end of the upward trend. It often signals the beginning of a new, much larger wave. The price action we're currently observing appears to be part of this second wave. From the peak of the first wave, the price has entered a downward correction that aligns closely with classical technical tools such as Fibonacci retracement levels. Specifically, the 0,618 and 0,786 levels are critical zones where corrective waves often find support and reverse. The 0,618 level, also known as the golden ratio, is widely regarded by professional traders as a key reversal zone. The 0,786 level is another significant Fibonacci level, often seen in deeper corrections where price tends to stabilize. The price behavior at these levels will likely act as the trigger for the third wave. According to Elliott wave theory, the third wave is the most aggressive, powerful, and often the longest wave in the 5-wave structure. It typically generates strong market confidence, heightened buying interest, and provides significant gains for investors. During this phase, momentum is strongest, volume increases, the market moves broadly upward, and the trend becomes visible to a wider audience. When the third wave begins, price typically rallies to the 1,618 Fibonacci extension level. However, this is only the minimum target. Depending on the strength of momentum, general market sentiment, and whether key psychological resistance levels are broken, the price can extend to 2,272, 3,272, or even 4,272 levels. For this reason, accurately identifying the end of the second wave is crucial for investors. Catching the beginning of the third wave is one of the most strategic ways to realize high returns with relatively lower risk. It is also important to remember that the second wave often misleads investors by presenting a false, bearish outlook. This is sometimes referred to as a bear trap. Investors may exit the market or hesitate to enter trades upon seeing the pullback, only for the third wave to begin strongly, causing those on the sidelines to miss out on the major move. That's why it's essential to closely monitor price behavior between the 0,618 and 0,786 levels. Signs such as a strong bullish candle, increasing volume, or price holding above key support could be the first indications of the third wave beginning. In conclusion, the current technical setup appears to be progressing in a textbook and ideal Elliott wave formation. The first wave has completed, the second wave is pulling back in line with Fibonacci levels. And if the price holds in this zone and begins to reverse upward, a strong and high-volume third wave could ignite a significant bullish move in the market. Therefore, being patient, waiting for confirmation of a bottom, and timing entry into this major move can offer a substantial advantage. The MACD, or Moving Average Convergence Divergence Indicator, is a widely used, highly reliable, and effective technical analysis tool for identifying momentum shifts and potential trend reversals in the markets. This indicator is primarily based on the distance and direction between two different exponential moving averages. It provides valuable insights into the strength and direction of a trend, particularly useful for buy and sell decisions. When we closely examine the current chart, we can see a notable crossover between the MACD line and the signal line. This crossover has occurred below the zero line, and such formations typically indicate that the downward momentum is starting to weaken and that buying pressure is gradually building. Crossovers that take place below the zero level are often interpreted in technical analysis as an early bullish signal. However, there are a few more important details that must be considered for this signal to be fully valid. Firstly, since this crossover has occurred below the zero line, it might still be too early to call it a strong bullish signal. However, the fact that the lines are beginning to diverge in a positive direction could be an indication that the upward momentum is gaining strength. The more significant signal would be if the MACD line and the signal line move upward together and break above the zero line. This move is generally regarded as a stronger confirmation that a clearer upward trend in price is about to begin. A break of the MACD line above the zero line technically indicates that the short and medium-term moving averages are beginning to converge positively, signaling a possible shift into an uptrend. This also has a notable impact on investor psychology. In many algorithmic trading systems, a MACD crossover above zero is considered an automatic buy signal. Naturally, this can lead to increased trading volume and support further upward price movement. It is also important to assess whether this crossover is supported by volume. If there is a noticeable increase in volume during the crossover, this suggests that the upward move has a stronger foundation. Additionally, if other momentum or volume-based indicators like RSI or OBV are also producing similar signals, the overall technical setup becomes even more robust. In conclusion, we currently see a positive crossover developing on the MACD below the zero line. If this structure continues and the MACD line moves above the zero level, we could see more clearly defined upward momentum and price action. However, investors should remain patient at this stage, cautious of false moves, and wait for the breakout to be confirmed. That's because the effectiveness of MACD signals is significantly strengthened when they are supported by price action and other technical indicators. Separately, according to Elliott wave theory, once the second corrective wave is completed, the price usually begins its main rally because the third wave is typically very long and strong. Yes, friends, I hope you liked the video. If you subscribe to my channel and like that video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.